All righty then. So let's get. Oh, awesome. Okay, I'm starting to see everything now. So yeah, we're just doing kind of a short session this morning on earnings. Let me show you one that we're in right now, and there's just a couple of different earnings types of plays you can do. And essentially, it's before earnings. Well, let me manage this trade real quick. So IBM, this is a day of earnings trade that we did. Okay, and we did a bearish bet. We sold the 152.5 call and then bought the 157.5 call in case this thing took off. And then we sold this for so the three types of earnings trades. You can do something in the weeks up to earnings, you can do day of earnings, and oh, just toss. Nice. Okay, let me try that again. Share screen. Yes, desktop would be good, right? Okay. And then let me actually try to get my so I'm on let's see, Cam. All right. So we got that. Chat. I've got everything out of whack here a little bit this morning. So what I was talking about here is that, and I'm going to cover this real quick, but there's three types of earnings trades that you can do. And it's leading into earnings, day of earnings, and then after earnings, okay? And I'm the first to say da, 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 da. Okay. Chat. There we go. Yeah, let me double check here. So I got like multiple bogeys going on here. Can you guys hear me okay? Yeah, okay. All right, so three types of trades. So that we're gonna kind of touch on briefly. We've got earnings trades that go, I mean, essentially, you have one leading up into earnings, but not through earnings. Okay, that's like a fun option trade that I like to do. And so that's one type of trade to do. And two, day of earnings and hold through earnings. And then three, day after earnings. Okay. Now, if we're ranking these in terms of what I would say predictability and all that kind of fun stuff is, I would say one is probably three. Essentially, what it is 1 and 3 offer more consistency. 2 is the most risky. Okay, so the example I'm showing you right now in IBM is an example of number 2, where it's something I held through earnings. Okay, and we'll talk about the whys and the hows and all that kind of stuff. But the main thing is that I did something where I was making a bearish bet. I can talk about why, but the way I structured the trade is that if I was wrong, it was not going to blow up in my face. Okay, and so that's the real key takeaway here, is that if you're wrong on this trade, you don't want it to destroy your day. So first of all, it's small size. Secondly, it's about a 1-to-1 risk to reward ratio. So if we look at my trade price on here and bring it over here, you're going to see that I'm not risking 10 to make one. Oh, trade price is already on there. That's awesome. I'm not risking 10 to make one. Okay. So I don't know what anyway, I sold this for like a $2.36 credit, but my max loss is going to be something like around $5. So it's about, a 1-to-1 risk reward ratio, give or take. So now it's gapped down. That obviously helps with the implied volatility, which has fallen, but also directionally. And so I can just get out of this. And so what I need to do is in the room as well is, for those of you in the room, if you want to let people know, 16 cents. I'm just going to get out of this. I don't want to get cute. And I'm going to disable this and say, yes, please just get me out. And so that order is working. So that is an example of a trade that I would say is left a lot more up to fate, left a lot more up to chance, and left a lot more up to position sizing, okay? And I do them, but I do them with small size, and it's one of those things that, I think especially if you get situations where you have earnings with extremely high implied volatility, you can play that IV crush, which is great. Or you have situations where you have reason to believe the earnings are going to be positive, et cetera, et cetera. The downside of this trade, and the reason I'm showing you this trade, is that it's not something you can really back test. It's kind of up to market experience, it's kind of up to fate, and that's why you've got to position size correctly and all that kind of fun stuff, okay? So that being said, what I want to talk about is something that I think is funner. Okay, and then let me closing this trade out. Nice one on IBM. So that's again an example of a trade that is kind of up to fate a little bit, but it's also, if you use your option knowledge of IV crush, position sizing, and things like that, there are opportunities in there. Okay, the main takeaway here is you'll notice that I did small size. So I did a 10 lot trade. I'm trading a fairly large account, but I'm only willing to do small size on that trade. That being said, I'm willing to do much bigger size in setups that I have a lot more confidence in terms of being able to back test them, right? Which is why I like the CML tool so much. So first of all, any questions about that? I just want to make sure that you guys are with me before we dive into some other stuff here. That was just an example. It happened to be that I had a live example of trade number 2 on, and wanted to show that. And let me get my tea here. Okay, so from there then, what we want to do is we want to look at the idea of how do we test stuff, and I'll show you the things that I like to test the most. And some of these trades I had been doing on my own, but it was more just based on experience. Like I wasn't really able to back test them. So then Ophir came up with, he and his team came up with this amazing tool, and that we talked about the other Monday night. And so let me bring that up here. And what's great is that now that I'm able to actually test this stuff, so again, main takeaway here is that the riskiest earnings trade I did with small size and a good risk to reward ratio. The 1 and 3, which I would call look, all trading's risky. I mean, but if you can actually have some tools that tell you like, oh, you've got some stuff to work on here, then I'm willing to put on some bigger size. And it's the main thing I can talk about there. It's, I guess, the main takeaway. So what's a trade to do on this? So Alibaba. This is a trade that I have right now that's not working because I'm out of my earnings run trade, which I wish I still had it. I thought I mistakenly thought that Alibaba would possibly pin at 150 this week before taking off again. And you can see that it's still taking off. But one of the things that I'll do, and this is an easy thing with Thinkorswim, is go through here and just say like, okay, when is earnings? I actually don't really look at the earnings date. I just go through here and look at the IV, 24%, 27%, 31%, 33%. It's typically the highest IV. Honestly, it stands out more than that usually. So, so that's 30 days out. So let's do a quick test here on Alibaba. I've never done this test, but I'm curious. So let's just say that custom earnings, that I open a position 30 days before earnings, and I close it out the day of earnings. Okay, I can hit save. Let's go 30 days. If I'm doing this correctly, I'm going to do let's try a long call first, and then just see what that looks like. And essentially the idea with this is that what I want to do is just say like, hey, you know what I think is, based on my past experience, is that if I buy calls on Alibaba, and it looks like a lot of the return came here, and that's good to know. And you see something like this, you know, and you can see like wins, losses, et cetera, you know, what happened, and you know, wow, a 2,366% return. But we want to keep in mind that all happened based on one incident. Okay, so we want to keep, but that being said, we see that there's some decent movement there. But what about a long straddle doing that same thing? Yeah, Ron, good question. The days to expiration. Look at this. So this is a straddle as well. So that's pretty awesome. So so here's how this works, as I understand it, is that if you do 7 days, that essentially what that means is it's going to roll every week. So if you say, I want to do, I'm going to do a straddle, a long straddle, okay? Well, if you put 7 in here, it's going to roll every week, okay? So by putting 30 in here and matching it up with my custom earnings, what I'm saying is I want to hold that same earnings through that same contract over the next 30 days. Does that make sense? So this is how, for example, if I just said, you know what, I'm going to do a long straddle, I'm never going to trade earnings, and I'm going to do that every week, I'm guessing that this is going to lose money. But let's see here. Yep, okay. So let's see what this pops up here. And as I'm waiting here, I'm taking a bite of a Quest bar. Yeah, let me see this. Yeah, and you can go into the custom and do some things in there too. Really what it's doing is it's giving you information kind of on the personality of the stock. Well, let's go back to the one I was looking at. I'm not sure what's going on there. So custom earnings 30 days before, and we want to do straddle. There we go. So straddle, long, custom earnings. In this case, I want to go 30 days before and close it out day of, save. Oops, and I got to change this to 30. And what we saw on that was that it was pretty decent. Now what happens is if you get a lot of people running tests at the same times, they have had this overloaded. So I do a lot of my tests after market hours, but they're also continuing to increase the server capacity. It's interesting. The night, Monday night when I was doing it, it was lightning fast. So yeah, it depends on the server load and everything. Yeah, and that's something that, and one of the things I found is that they're very, very open to feedback. So, increasing the server load, et cetera, et cetera. So based on this, what I could do is just come in here and say like, okay, we can see that the August monthly options have the highest implied volatility. And if I actually look up the earnings date, sometimes it's more obvious. But if I look up the earnings date, it says 8/10, August 10th. So that would make sense. And then I can see on this that by doing the 60-50 deltas, 50-20 deltas, and obviously there's more emphasis on the calls here, less emphasis on the puts. 40-20s, 20-10s, et cetera, et cetera. I am intrigued by these So one of the things I've found is that when you buy options, during a month so what happens is that we run into earnings, the implied volatility here rises. Those out of the money options will typically hold on to their premium. So it's not out of the ordinary for, especially as even if the stock is stagnant, for these options to say, go to 30 cents by the day, on the day of earnings, because everybody's excited, there's a lot of juice going on. And then if for some reason it rises into that, it even gets interesting there. So what I'm interested in doing is this as a test, is we can say like, okay, if we do that's pretty far out of the money, but the 40-20s, if we come over here and we say, all right, I'm going to look at deltas, and I can see that here's the $38 calls, they're $3.75, and I'm just gonna buy these legs separately. So I can buy this 10 lot there. So that was on the call side, and then on the put side, it was the 20 delta puts. So we'll come over here to deltas, and we got the 23s, and I'll do the 140s. So obviously that's more of a strangle, right? And I think that's working. All right, I gotta just change my price by a penny there. Okay, and then I'm just gonna range positions by order so we can see. So this is a different trade, you can ignore that. But this essentially, I'm making a bet that this implied volatility, which is 34% right now, it's probably going to rise to 60, 70, 80 some odd percent by the day of earnings. And that's really what my bet is I'm long volatility here. Now, I went deeper, I went closer in the money on the calls because, what I'm seeing is that the tech stocks especially tend to rally in earnings. Now, I'm kind of covered in case there's some volatility to the downside, but in general, even if the stock trades sideways, I'm expecting that the price of these will increase as implied volatility increases. Okay, so does that make sense? And so that's how I'll use this tester, just to kind of say like, okay, this is something I'm looking at. This is my idea. How has it worked in the past? Can I show the Analyze tab for this trade? Yeah. Now it's gonna be a little goofy because of the iron fly I've got on. So you can see that. But I can take those off. Let's see. So the long straddle, the nice thing about the long straddle is you've got fixed risk. So a long straddle is kind of like a smile. So the most I could lose on this trade would be the price that I paid for the options, which is $4,950. So, if for some, which it would be hard for both to go to zero, but it would be possible for sure. I've never seen options go to zero on day of earnings. Even if you look at Priceline, even 4 standard deviations out, people are paying day of earnings. Now, day after earnings, yeah. So keep that in mind. And then really what we're looking at here is then this is based on the implied volatility staying flat. So this is based on price movement. But you want to remember too, and it's hard to model these out, but you want to understand too that what's happening is a situation where implied volatility is also rising. Correct. It is. I keep calling it a straddle, but it is a strangle. And then keep in mind too that you can go through trade by trade and then just kind of see what was going on and different things like that too. If we look on this and just say, okay, one of these was pretty awesome. Which one was it? And then you can go through, you can export all these into Excel, et cetera, et cetera. One I'd like to look at is, let me see, when are V earnings? So, V earnings are still pretty far away. But let's look at Facebook. Oh, Ron, nice. Yeah, and what's cool is that for those of you guys that are starting to get the hang of this stuff, is if you do cool tests and stuff like that, it's awesome. It's fun to share them too. And keep in mind, the whole idea of this is that what I love about the backtester is it's more, if you're newer to trading, it's priceless because all of a sudden you are like, oh my gosh, I didn't even know you could do this. If you're an experienced trader, what's great is that you get to quantify your ideas. Like you're like, oh man, over the last 4 years, I've noticed that tech seems to rally into earnings. Is there a way to consistently make money from that idea? And then you can start testing things, and it just because what I've learned in doing this is that there's strategies I didn't even consider. So I would just play around with ideas, not really expecting anything, and then all of a sudden it'd be like, oh my gosh, I didn't even realize that that would work. Oh, awesome, Ron. Thank you for pointing that out. Yeah, so on the forum there's a great for CML setups. Perfect. Yeah, I actually would like to look at Apple because Facebook to me is already run, and Apple's been kind of a dud here, like compared to a lot of these other companies. All right, so here's Apple. Now, let me see when Apple earnings are. Did you guys see VRTX this morning? Their trials went well and it gapped up $32. That'd have been nice. Okay, so Apple earnings, and you can see now it becomes obvious, right? So this week we're at 19%. Next week we're at 19%. The week after we're at 27%. So that's when earnings are going to be. That's how I look at the earnings date, because the market makers always know. I've seen sometimes where the earnings date that's published is actually incorrect. So, and I don't know if that's games and stuff like that, but just keep in mind. So we're 16 days out from earnings. Or it's not 16 days out, but the option series is 16 days out. So let's do this and do, I think if we do 16, let's do 2 weeks before earnings, okay? And then if we go into custom earnings, we just say, all right, so 15 days before earnings, and we close the position day of, and again, this is implying that we're not rolling the options. I actually want to do a long call, that we're not rolling the option. What we're doing is simply holding that option into the day of earnings. And so you can see it's like Apple's been a little sloppy, at least initially, right, when we're looking at this. So then let's look at, well, what about a straddle? And I'm going to change these and put a true straddle on here as well. And let's do, so, and this is, so what I like about this is now we start to learn the personality, right? We start to learn the personality of the stock. It's like, wow, Apple at least is showing that it's been kind of quiet running up into earnings. So let me try something else here. Let's say 15 days before earnings, close position, because I've actually noticed that Apple also tends to be really goofy the day of earnings. But what's great about this is that we saw that while a long straddle tended to work on Alibaba, it's obviously not tending to work on Apple. This is obviously very valuable information, right? Because if we're sitting there going like, wow, long straddles work running into earnings, like that's a generic statement. But we can look at it and say, well, that's not necessarily so. Yeah, and Ron, this is a great one. So Ron shared one where if you go into custom earnings and say, okay, open the position one day after earnings, and I'm finding a lot of these are actually pretty fun too, doing it the day after earnings and close the position 7 days after earnings, and you do a call credit, do a long call debit spread, you can see the return on that. That's a great one, Ron. That's a great one. So yeah, let me go in here into the straddle. I'm gonna make one of these 50-50. So we have a true straddle. So I'm just looking at this as Apple's like, wow, a run up in earnings isn't really looking a lot of fun. But what about after earnings are released? Okay, so let's do 1 day after earnings, and then 7 days after earnings. Okay. And then all of a sudden, although, kind of the default, hey, I think I'll buy a straddle into earnings does not work on Apple. Okay. We can see that there are different strategies that work after earnings. So let's try a put spread short. Oh, And when you see that error that comes up, it's because I've got that 50-50 delta, right? And if you're doing a put spread, you're not going to do it with the same deltas. So let's try 70, 50, 50, 20, 40, 20, et cetera, et cetera. And now we're starting to at least see something like, okay, with Apple, that's kind of working. The nice thing about Apple too, of course, is it's very liquid. So I also like to have some stocks that are, you know, a little bit more liquid, because some of the options I trade are not that liquid. I'm not a huge believer that you have to trade liquid options. Oh, that one's off. I'm a huge believer that you should be aware of the risks involved. And then you'll see here now by doing this, we're saying like, yeah, and James, that's a good. And so the whole idea with this is that if you get a stock that you like to trade, then you can start doing various tests on it, right? And that's what I really like about it, is you kind of understand and you learn the personality. You know, it's kind of like, okay, great. You know, if we're doing some stuff after earnings, this is what works. If we're doing some stuff before earnings, this is what works. But more importantly, it's kind of eliminating a lot of the frustration involved in, you know, trying a strategy that just may not work. Yeah, and then the next thing, of course, is you come in here and say, well, gosh, if I have, you know, if I get to losses above 50%, you know, let me cut it loose. Which is great, because then you can also see that sometimes a little tweak like that can really make a big difference. And that does increase a lot of times with some of these stocks too. And you know, this is something that I've kind of put together in my own trading plan, is I'll have a 3-day rule. You know, if a trade, and this is, you know, a little different than earnings, but if a trade doesn't work in its first 3 days, especially if it's a long option, and you know the duration of the trade is like 15 days or less, I'll just cut it loose. And what I've found, and what's great about this back tester, is that it'll kind of pinpoint the personality of a stock and say, look, if this thing's not going to work, you know, it's not going to work from day one. And so, you know, that's where you know, a 50% loss, you know, tends to turn into a 100% loss if you don't do anything about it. And so that's one of the nice things about it, is that the trades that tend to work in options a lot of times tend to work kind of from the get-go. So by having, you know, even a 30% stop or anything like that, you're essentially weeding out the ones that are like, man, this one's just not working. Yeah, and axe cap, and you know, for people like that, like, and Sue, I know you're really experienced trader, is that if you've got something like that, and that whole idea of, yeah, the rinse, lather, repeat trades are great, and especially with weekly options, and you know, rolling it every 7 days, rolling it every 14 days, rolling it every 30 days on a particular stock. And what you're doing is essentially extracting premium, right? Extracting income from the markets, which is fantastic. And it's the whole difference between being able to back test it and see, you know, like, all right, well, what would have happened had I actually done this, versus forward testing it. Because backtesting the stock is not hard, right? You can backtest stock strategies, but backtesting option strategies is not as, you know, less, you know, you can't, you can eyeball it. You could look at a chart over the last 2 years and say, well, gosh, it looks like had I done this, it would have worked. But that's first of all, it's a lot of eyeballing, and secondly, you can miss a lot of stuff. Yeah, let's look at Caterpillar. So Caterpillar has earnings on 7/25. And I think they recently did a reverse split, right? So again, if you come over here, you'll see 18% implied volatility. Oh, 32% implied volatility. So we know that earnings are next week, right? I didn't have to look it up. And we can come over here and we can look at Caterpillar. And let's first try, all right, so days to expiration. So this one is going to be 9 days to expiration. Let's do custom earnings. We'll open a position. I'm going to do 7 days. All right, let's see. It's got its thinking cap on here, and we can kind of take a look at it. Yeah, this session is being recorded. All right. So if we look at this, we can say, okay, if we do a long straddle like this, again, what I found with the long straddles, a lot of times the deeper the money ones are kind of, it's like, it didn't work so much. But also keep in mind, when you look at this equity curve, you'll notice that there were 3 wins and 5 losses. And when you have something like that, it means that one time it worked really well. And so that's the kind of stuff that I look for and kind of like, okay, so that was just an anomaly. Versus if you see what Ron posted, look at the consistency in this. So I'm looking more for that, that cycle that can be repeated versus, it happened to work really good one time. So just be sure that when you're looking at this stuff, that you are noticing that and you are looking for that. Because a one-off is a lot different than a pattern. And yeah, one thing here's one strategy I'm actually wanting to test more of. And if you guys remember, this is something I noticed a lot last quarter. So let's do, if we open something 1 day after earnings, okay, and then we close it out 7 days after earnings, and it's essentially selling exuberance. Okay, so we've got a short call credit spread. And just the idea of, I call kind of more of the gap and crap. And that's a pattern that I noticed more last quarter, where stocks would gap up a modest amount and then they would trade sideways to down. Now, if they gap up greater than the expected move, they tend to keep going, but most stocks don't do that. Most stocks stay within the expected move. So this is a scan I have been playing around with more and trying to find stocks that kind of fit that pattern of, for lack of a better term, just the good old gap and crap. Suck them in, spit them out, and churn them out. So, over the last, so over the last 2 years, that has not been a good category, not a good strategy for days to expiration. Let's do 14. Yeah, we could actually do weekly options on those too. Let's try that. And again, I'm just playing around with inputs. So this is one, if for those of you that like to tinker with this stuff, this is an idea that I like. And I'm in the process of trying to find a stock that actually matches the theory. Okay. So for example, I know that Netflix tends to run higher after earnings. So that's not something I'd expect to work on Netflix. And it's usually going to be something a little more obscure, not that brand name stock. Although one stock I've noticed that does do that is Facebook. Now, I haven't tested it, so I'm just going to look at it and say, Facebook tends to suck people in, but it also has had, a couple of times when it's had a tremendous run after earnings. So you can see that this would have been a disaster, right, to do it on Facebook. But I like the idea of just like, okay, there's got to be a stock out there that, after earnings, it kind of sucks people in and rips their head off. And what is the stock? And I don't know what the stock is. It's more like, okay, I got the idea, but is there a stock out there whose personality fits the idea? Because there's one out there. That's the one thing I've found, is that if you've got an idea, there's a stock out there that fits that personality. Now, the other thing to keep in mind too is when you run a test and it's a disaster, like, wow, that's not working at all, guess what? There is money to be made doing the opposite of that too. So if you run a scan and you get like 80% losses, that's actually a good thing, because the opposite side of that trade could be very profitable. Yeah, so for those of you that don't know, we have a forum in Simpler Options. So let's see. So if you go into options and log in, you'll see there's the daily videos, you can manage your account, and then there's a knowledge base. And if you go into the knowledge base, there's different things there, and all that kind of fun stuff. Okay, so, oh yeah, so if you go, so you'll see the helpful links here, and then there's an option trading forum here. See the helpful links? We're hopefully going to have our new site out soon that actually makes this stuff easier to find. And so you can see some of these have been fairly active, right? Yeah, so if we go in here to trading plans, CML setups. Yeah, that's great. So you got a whole, I'll have to dive in here and look at this as well. So a lot of good stuff there. Well, what's interesting too is in the chat room is and obviously I'll notice people's posts, and I'll see like Sue and Ron, when they're posting stuff, it's like, oh, obviously these guys have a ton of experience. And so it's great when you guys get active and sharing information and stuff like that too. I always say with the room, the goal with the room is it's almost like human AI, where if we can all just kind of look at, we all have our strengths and weaknesses, right? So, I'll have certain setups that when I spot them, I'm like, oh my gosh, this is great, and I can dive into that. But there's other areas of the market I'm just not paying attention to, but are actually very profitable. And so I also want to look at, what's Henry doing? What are some of the people in the room whose posts I respect? What are they doing? Things like that. So I think it's great. Okay. So does this make sense? So what I'm doing here is I'm encapsulating an idea. I call it the sucker trade. So when people after earnings get excited and buy calls, when doesn't that work? And so that's essentially what I'm looking for here. And I haven't found it yet, but that's, as I go through, and you can go through, and as you customize these, you can kind of save these and then just go through and dump in various things. Okay. And by the way, what's going to happen, guys, it's 9:20. So Ophir is going to come on in 10 minutes. And so what we'll probably do is just take a short break. But let me see if I can find, what's a stock that, let's see, I'm curious. I want to find a stock that meets these criteria. I'm assuming it's not Amazon. I'm looking for the post-earnings gap and crap. So, okay, so here's an obvious one. It's like, wow, shorting calls on Amazon after earnings doesn't work at all. What happens if I would just do a long call spread? So again, when you have an idea like that, and you can just start punching in symbols, if you find a bad idea, that's actually a good thing. And sometimes it's almost easier. I always think of it in terms of like, let me find a horrible idea. Because if you find a horrible idea that never works, the opposite side of that trade works pretty well. Oh, Starbucks. Let's look at Starbucks. Okay, so Starbucks, short. So interesting. So this is actually a setup that I think is going to work well on some stock. Obviously, I just haven't found the stock yet. You know what I should preference though? Gosh, I wonder if, so this would be something I could ask Ophir about too, is that can you, what would be fun is to say like, okay, so here's because here's what I think. I think this strategy would work well on any stock that gaps up, but gaps up less than the expected move. All right, so the expected move is 4, it gaps up 2. I think if you sold a call credit spread on that, it would work a lot. So that's what I'm looking for, but it's hard to do because on, you know, like on Starbucks, so if it has a gap down and you sell a call credit spread, it's probably not going to work, right? Because a lot of times, even when a stock gaps down less than the expected move, it's going to rally. So that might be an interesting post earnings, like say like, okay, on a gap up, you know, blah, 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 blah. So there's some things like that too that we could look at. Okay, guys. Hey, guys, let's do this. Let's do a quick 5-minute break. And then,
Hey, John, just wanted to let you know I just joined. Sorry about that.
oh, perfect. Okay. You know, what I was doing here, I was trying to show, I was trying to find some examples here of, yeah, like, you know, kind of like a gap in crap after earnings. And so we've just been kind of running some tests live, and it's been kind of fun. And again, the same thing. It's like, wow, these really aren't working. Of course, you could always do the opposite. And then somebody in the room posted this. If you can see this, hold on just a second, guys.
So hey everyone, this is Ophir Gottlieb from Capital Market Laboratories. We're the company that provided the back tester. Just want to let you know that I'm here in the trading room and kind of getting up to speed. And if you have any questions, please feel free to send them through the Zoom QA app. Zoom question app seems to be working pretty well. Hey, good morning.
All right, sorry, I had to jump off there real quick. Yeah, so I was just kind of going through. We were running some stuff on some various stocks. So if you've got if you guys want to take a few minute break, or Ophir, if you want, I can just turn it over to you if you've got some stuff you'd like to dive into. We've been looking at upcoming earnings, but a lot of it is just some also questions on the tool itself.
Yeah, I mean, I'm definitely happy to answer questions. We can look at some companies that just posted earnings or earnings to come. Whatever you like. I'm happy to kind of take the pilot's chair for 5 or 10 minutes if you need to take a break or whatever.
Sure. No. Go. Yeah. No. Feel free. Go for it. And I think it's always fun just kind of looking at different things you're doing as well.
Okay. I will. Do you share the screen with me or?
You might not. You might need to be upgraded. But if you are, then you'll see a little button to share.
Okay. Okay. Let me first get the back tester up on the right screen, and then I will take it over from you. All right.
Can you run a scan in there to see if NVIDIA is going to make new all-time highs today?
Yeah, exactly. My Magic 8 Ball says not today. Let's see here. All right. So, I see we're using a lot of traffic. Hold on one second. I'm going to restart the backtester server so everything's much faster. Amazon's actually working finally. It's a miracle. I'm bullish again. No, okay, just kidding. Hold on one second. Okay. So I will grab the screen and I'm going to share. I will not grab the screen. All right, maybe we will take a 5-minute break. I'll come up with some relatively short-term but salient trades that are surrounding earnings that are essentially right now, and I'll also look at like IBM and Qualcomm and all the things that are happening, banks as well.
Sure, yeah, that'd be great. I'll put up a little note here. We can all it's a great time we can grab a quick coffee, all that kind of fun stuff.
Okay, awesome.
Okay, quick break.
I will also answer questions. All right, let's see. I see a bunch of questions. I'll just get to those. Okay.
So I'm going to put a little note up here that says we'll get started at 9:35, so 5-minute break.
Okay, sounds great. For anyone that's still on, I will simply be looking through questions and seeing if I can get through some of those. So just bear with me. But no trade talk. No trade talk. All right. Okay, is there a user's manual? Someone says they haven't found it yet. So our user's manual are videos, and you can find those videos on the Discover tab, but you can also find them in the welcome email. You get 2 emails. The second email says, sort of critical hints to know, and they're in there. And even further in that email, we have a link to our Vimeo channel, which just has all of our videos, and they're labeled pretty well, so you don't have to sort of go through videos that don't interest you, but it should be able to take you through certain things. But I would start with the Discover tab. It shows you how to choose your execution type, things like custom strategies, things like that. Okay, check out the IBM seller. Okay, I will do that. Okay, see, someone asked about the Discover tab. So we don't actually make recommendations. That's not a recommendation service, though we may have one later. But yeah, the Discover tab is designed, it covers all of the trade setups we've sent through history. And there are links to them. Many of them have videos as well. So some of them are written word and video. The other part of the Discover tab actually has essentially a user's manual via video with some text as well. So that's how I would use the Discover tab. Also, when we publish a new trade to the Discover tab, you'll get an email you'll get an email first, which essentially says, hey, there's a new trade set. I want you to take a look. And you'll be getting one on Starbucks this morning in an hour and a half. It's going out in an hour and a half. All right. Will you be explaining the weekly? Okay, so here's a great question. If my strategy uses 45 days to expiration, I put 45 days in the upper days input. With the backtest, use weekly, monthly, or both. So it would use whichever option has an expiration that's closest to 45 days. And you can find sort of a more detailed explanation of that in the Discover tab, but that's the general answer. We'll look for the expiration that's closest to the one you specify. When you're using a 30 or a 7, it's pretty simple. When you use a 45, yeah, well, it depends where we are in the option cycle. It's probably back month, but it could be a weekly as well. I'm going to restart this. Awesome. Okay. So we just restarted the, well, we didn't restart it. We just, Amazon trickled over and gave us more power on the backtester. So everything should be exceptionally fast right now. So if you're having any trouble, that should be over. Amazon service is so-so. Oh, sure. Top community shares. Yeah. So if you go to the backtest window and enter a backtest, doesn't matter which backtest, just kind of get something loaded. On the upper right-hand corner, you're going to see share buttons. So like Facebook, Twitter, LinkedIn, StockTwits, Google Plus, if that still exists. But most importantly, on the far right-hand side is a little, it's an icon of 2 pieces of paper that gives you a link. You can share your link on, you can share your link on social media, and whichever of your shares, so your tweets or Facebook posts, whatever, get the most views, they start coming up on your top views thing. And then if it goes far enough and it gets into the top community shares, we'll also show that. So it's basically just, it's keeping track for you the amount of views that are seen on your the sharings of your backtest links. Sorry, 1 second. All right. Nice job, guys. Usage from Simpler Trader has caused us to upgrade to our 8th box. So, yeah, exactly. So
that's awesome.
Yeah, so Amazon stands up the boxes relatively slowly when they're this big. I don't know why. It used to be really cool, but we just stood up our 8th box. So Simpler Trader is responsible for an 8th box. Thanks, guys. Very nice. That's good news, by the way. That's good news. So, all right. Let's see what we can do here with IBM. Let me just, before we do that, I just want to see what's going on with IBM broadly. Catch myself up. I was looking at some other names today. By the way, Skyworks is one of Apple's largest. Actually, I promised I would talk about trades for another minute. Sorry, I'll just.
I have a question for you. Do you have do you ever do any tests on this, or is it designed for day of? So if you say, okay, anytime IBM has earnings, I'm going to place a call credit spread and I'm going to buy it back the next day.
Yeah, so you can for sure. And then you decide, do you want to do it in the monthly or the weekly? Probably the weekly, right? If you want to do a one day trade. Yeah. So you can. The shortest I ever use options, other than I have actually learned a lot from you. You were showing when a great company beats earnings and then raises expectations, and then they have that huge pop, then there just tends, kind of like Netflix actually, and NVIDIA, which you called perfectly, it just tends to be the sort of mania even beyond the mania. Other than that, I'm generally not trading options in less than like 2 to 4 day increments unless something really bizarre happens. So I can get stopped out, certainly, right? That could happen at any time. And every once in a while, I'll set a target on something like, I'll buy a dollar option and it goes to $3 just because, I'd like to call it skill. Sometimes it's just luck. And then, I'll get out. But my intention is never I'll close it in one day. But the back tests are certainly designed to do that. In fact, with the custom earnings things, you can really trade that, that one day after, that one day of even. So I'm trying to look at, just trying to get my bearings. I don't follow IBM that closely other than, broadly I know what IBM is and I see that it ain't good. So let's see. By the way, this company's revenue is lower than it was in 2008. Just as an aside.
I did not know that.
Yeah.
We'll do is like on something like IBM, we'll just look at like, okay, over the last 8 quarters, it's gapped down 6 quarters. So guess what? That's probably a trend. Let's sell a call credit spread. They have earnings.
Yeah, for
and then
sure.
if it's, if it's flat, great, you still make some money on the IV crash. But then, obviously if you get the directional action, then you get a nice trade.
Yeah, for sure. And they're you're also probably not going to get, if you're wrong on that trade, probably not going to get kicked in the teeth too bad because they don't really beat that much even when they beat. So,
right.
It's sort of a pretty risk-controlled bet. So IBM reported after the close, right? Yeah. Okay. So we would do 1 day after and 2 days after. So that would be today. Let's see if I can't find something cool here. I feel like there should be something.
And if you want, you can, I don't know if you're ready yet, but you can grab the screen too if you want to.
Let me find something worthwhile. Okay, so yeah, I think you had this, but I'm gonna throw my screen up, click on Zoom, take share screen. Okay, this will stop the other screen sharing. That's all right, right?
Yep, that's good.
Okay, all right. And I want to show the screen with the back tester, which is this screen, and I will share my screen. Okay, so what I'm looking at, this is IBM. I just gotta catch everybody up. This is IBM. Looking at selling a put spread 1 day after earnings. Okay, so that would be starting today, and 2 days after earnings would be tomorrow. Right? These are the various deltas, right? So this is like kind of an at the money put spread, 50-20, and this is getting further and further out of the money. I'm using the weekly option, just since it's a 1 day trade, I might as well. We can see that as long as we're, not crazy out of the money, this trade has won 7 of the last 8 times. I have no idea how this looks over 3 years. Let's be a little discovery. Okay, so it's worked over 3 years as well, and let's see how it's worked. All right, and it's been a winner for the last year. So I'm clicking around quickly. What I'm looking at, selling a put spread in IBM, day after earnings, closing it the day after that, 1 day trade. I'm using the weekly options. I'm looking at the last year. And I'm looking at the returns, but more than that, I really like high win rates. I'm not going to do a daily trade unless I feel like there's a high win rate. And so far, it's worked over the last year every time. Obviously, it doesn't have a 4th one up right now because we're in the middle of it. And over the last 2 years, it's also won 7 of the last 8 times. So that's interesting. But let's do a little sensitivity analysis. Let's just see what would happen if I just did it for a week. I wonder if this really is a 1 day thing. I feel like it could be a 1 day thing. That looks pretty good. So I'm looking at this spread, selling the 40-20 put spread, so a credit put spread. If you look at the return, if I did it the day after earnings for a week, it's a 29.3% return. What's interesting about that is that if I set my custom earnings dates, if I just do a 1 day trade rather than a 1 week trade, okay, so it does double the return. So you're taking a bit more risk because you're holding that position for a week rather than a day. But it does seem like there's a little bit of this kind of IBM throws up on itself and then it's kind of safe. And so this trade, per the backtester, opening would be at the close of today, right? So the backtester uses essentially end of day prices before the markets widen. So if we were to trade 1 day after earnings, that would mean that the trade would start today at, let's say 5 minutes before the close. So we would let this stock change. I don't know if everyone knows what's going on. I'll move it in front of my screen. This is what's going on in IBM today, right? Down off of earnings. So it would wait for this to do whatever it's going to do and settle. And then near the end of the day, that's what this trade is doing. I feel like another big name had a bad day. Was it Qualcomm? Okay, Qualcomm has earnings today after the close. Ooh, how tantalizing. Let's see how they do. First, I'm gonna share my screen just so we see what, so this is a Qualcomm stock chart. I'll make it easier to look at, turn into a line. The E's represent the earnings dates. So here's an earnings date where they just collapsed. There's another one where they collapsed. This seems quiet. This seems like they beat. This is a nothing. This is a collapse. This is a nothing. Okay. Well, they're hardly impressive during earnings. Good to know. I tend to like, actually, Qualcomm's a pretty good company to sell volatility, and just never looked at it this close to earnings. So let's give this a little test. So again, I'll just keep, don't want to get ahead of everyone. As of right now, I'm looking at one-day trades. Since Qualcomm has earnings today after the close, today is Wednesday, right? Yeah, so this trade would be opening tomorrow at the close and closing it on Friday at the close. And it looks like, again, even though Qualcomm has some pretty ugly earnings, this has a pretty, a 75% win rate that's okay with me. I'm curious if, so that's what I thought. In the last year, it hasn't worked as well. It's more of a coin flip. But I'm, rather than looking at a one-day trade, let's go back to like my standard weekly trade here. And that does look better. Look at that, out of the money. Okay, so if you're looking for some action on Qualcomm post-earnings, not the earnings event, it does look like, let's take it back 2 years too. Okay, look at that. I wonder if it works for, that would be amazing if it worked for. Okay, so for the last 3 years, the last 12 earnings cycles, if you waited for Qualcomm to do whatever it's going to do after earnings and just if it's going to crash, let it crash. You wait till the end of the day, you open up a short put spread and close it a week later using the weekly options over the last 3 years. So last 12 earnings cycles, it's won every time in the sort of the 30, 35 delta range. And it's always sort of instructive to see what trades you would be doing. So I'll just click on the, actually, you know what I'm going to do? Look in the last 6 months. It'll look super recent. Okay. Just click on a back test tile. And you can actually see what was the trade. All right. So in January, it looks like we were selling $1.50 put at 35 cents. Hardly sexy, but if it works, it works, I suppose. Let's see if we can widen out those deltas. So what I see here is we're selling a put spread that's $1.50 wide, right? So we're selling the 53 puts, buying the 51.5 puts. It's $1.50 wide. We're collecting 35 cents, right? So that's the risk we have on. Perhaps this looks a little better if we can widen. Maybe I want to tighten it, actually. Let's try and tighten up those deltas, see what happens. So in my this is where you can customize your deltas, right? So you'll see on the screen it says 50-20, 40-20, 35-15. Those numbers are coming up because I have them here, 50-20, 40-20, 35-15. I'm going to try something a little bit tricky. I'm going to try and tighten my deltas on that 35 delta spread. Doesn't work as well. It's lost one. 30-10 delta. All right, so there's good and bad about this trade. I'll show you what I like about this trade. I'll show you what I don't like. And ultimately, what I don't like is enough for me probably not to do this trade, but it's for everyone else to decide. So the win rate is beautiful. It's just keeps winning. The return is great, even if we move it down to 6 months. This is a 1 day trade, or sorry, a 1 week trade. So 12% in 2 weeks that's great. What I don't like is that we're selling. I don't mind selling $1.50 spread. I'll sell a $10 spread. It doesn't matter. But I don't like a trade where I'm only collecting 35 cents. It's personal. I like to collect. I'm probably collecting 50 cents, $1, $2 on trades where I'm collecting premium or more. So this is a really good example of a trade that looks great. Could be perfect for some traders. Pretty well-defined risk, right? But it's one that doesn't so compel me. Let's see if the IBM trades were a little nicer in terms of risks to reward. All right, so I'm going to do the same thing. I'm just going to click on a tile and see what spreads are actually getting sold. All right, so we were selling a $2.50 wide put spread, right? And we're collecting about 80 cents. So I actually like this trade more. Although I do realize I contradicted myself on the risk reward, but we traders are a silly bunch. What can I say? Yeah, I kind of like this. Let's see what happens with IBM if we just, maybe today's really ugly. What if we did this 2 days after earnings, just kind of really let it settle? How interesting. What a weird stock. Well, if you're looking to play IBM, rather kind of risk-controlled, quick trade, it does look like this one-day trade has worked. You know, it's lost once, and let's see when it lost. How bad was it? Actually, it was a pretty bad loss. You can see average win, average loss. Let's see when it lost real quick. Let's see what we're getting ourselves into. Oh, there it was. No, that was not it. Where is that? I feel like I should. I'm going to download this into Excel because this is getting ridiculous. Hold on 1 second. I'll share that with you as well. So it's just good to know. What I did is rather than click download Excel, I clicked copy. Right? Click copy. Let me delete my thing and bring in Excel. So I've just clicked copy here. I'm going to bring my Excel in here, and if I click copy, I can just paste. So just Control V, and I see all the trades. Right? It's that easy. So now I can actually take a look at what the back test is. It looks pretty. Oops. It looks pretty tasty, so we'll move on. It'd be great if I could stop doing that. All right, so it looks like the last time this lost for IBM was actually 8 earnings ago. So it's 1 for the last 7 earnings. And it looks like when it lost, I'll make this way more legible. Okay, we put on a trade where we sold a $2.50 put spread at 55 cents, 45 cents actually. And then the stock went from 163 to 160. So that spread got mushed. But I'm going to show you what's happened recently. By the way, this is actually good. You don't have to use 2 years, 6 months, 3 years. You can actually put the dates you want in right here. So I'm going to move up 1 quarter. It should be the last time. There should be 7 wins in a row, unless I have 6 wins in a row, of course, because I can't. The guessing game of earnings dates. Okay. There we go. So this is the last 7 earnings sessions. Let's take a look at IBM's chart one more time and make sure we're not fooling ourselves here. I'm going to pop in IBM. I'm going to look at that one that lost. So this is when it lost. This is 1, 2, 3, 4, 5, 6, 7, 8. Yeah, this was, no, it lost one further back. Hold on. Let's go back to 2 years, see what happened. I just want to diagnose this losing trade because before I put it on, I just want to know what I'm getting myself into. And it lost in Jan of 2015. I have that. Okay, here we go. So this is when it lost. The stock, let me zoom in a little bit so we can actually look at that trade. Okay, so the earnings, if you see that vertical line, that's earnings. That's the move off of earnings, right? So we would have started the put spread right there. That does not make sense. Oh, it's July, not June, July. Okay, let's do it here. Let's go back 3 years. And we're looking at July of 2015. If my mind can write myself. Okay. Here's the date. Let's take all these off. So you can also adjust your charts by just clicking off. So I don't want to look at the options right now. I just want to look at the stock. The gray line is the stock. Here's July 2015. Here's earnings. And here's what it did after earnings. Okay, so you see this little trail off? It's a really small bump. That bump, that's where this trade lost last time. You know what? I'm okay with that. If I was looking to do a one-day trade and I was so compelled to do it in IBM, yeah, this looks like a pretty good trade. Today's a bad day. Let the day happen. So we're selling a 30, let's say a 30-10 delta put spread. To put numbers to that, I'll just bring the screen on here and just look, what is the 30 delta? Here we go. We're using the weeklies, so that would be the July. The closest to a weekly would now be the July 28th. Actually, would it be the July 21st? What's the date today? 19th? No, it would be July 20th. Okay, so 30 delta put spread. So it would be selling the 146, 143 put spread. And today, as of this moment, it's 45 cents. If you're doing market, please don't do market, right? Never trade market orders. Looks like you can get about 45 cents, maybe 50 cents on this trade for one day. Your downside is $3 minus 50 cents. So yeah, that's not the worst trade I've ever seen in my life. So we got something there. Were there any other stocks you guys were talking about? I want to look at, if not, I would love to look at one of the banks. I like what the banks are doing. I'll go to the banks. So one of my favorite trades, maybe a trade I've fallen in love with a bit too much, is the banks. I'm going to show you the back test first. And of course I have to remember my trade. So I'm going to the Discover tab. I know I wrote it up, so I'll just read it. I'm trading, okay, the full month after earnings of 35. Okay, got it. Let's take a look at the banks. Let's sell a put spread. Let's make earnings custom. So it looks like I'm doing it, letting the gymnastics of earnings happen. So 2 days after for a month, use the 30-day options, short a put spread. And for some reason it's not being custom. Okay, okay. 30. Oh yeah, of course. It's like a 38-day option. No, I've done something wrong. Oh, 2 days, 32 days after earnings. All right. Yeah, it's a really good lesson. When you're doing a back test, make sure you like spend a second on the screen and make sure that you're testing what you want to test, because I just was looking at a completely different back test. So, and what did I use here? Just using a 30. Let me get that right option. And it was in my article, which I'm just, if you wonder where my cheat sheet is, I'm just looking at my article. It was a 35.10. So it was this put spread in particular that I wanted. All right. All right, so this is the put spread. I don't know why there was, oh, I had to stop. I think I might have put a limit on this. Interesting. Okay. So yeah, so this is sorry, I was doing a little figuring. This is the put spread that I love in the banks, which is that right after earnings, not right after earnings, 2 days after. So just let it happen. When did JP Morgan report? Let's see. All right. I feel like it's been 2 days at least. They reported on the 13th. Oh no, it's not right. They reported on the 14th, right? Okay, thank you. So the 14th was a Friday, right? Okay, so day 1 would be the 17th. Day 2 would be the 18th. Okay, today's the day. So today's trade time. If you're wondering what I was doing, we use calendar days, but a weekend obviously doesn't count. So earnings happened here, the 14th on Friday. So the trade was 2 days later, but I was waiting for day 1. Day 1 would have been Monday. Day 2 is then Tuesday. Actually, sorry, we do use calendar days, so day 2 might have been the 17th. In any case, I don't think this changes at all. Let's see. Let's just be really, really specific. Okay, it's the same trade as it should be. By the way, if you change a setting by 1 day, like it's a month and the results are really different, that's not a good back. The back test is right, but that might not be a good trade if it's that sensitive. And so I just pushed the trade 1 day further, and nothing changed. So I like this trade. I also like it at Wells Fargo. It would be opening it essentially today. We use market close, but the stock, here's the stock right now. It's not, it's JP Morgan. It never does anything. Let's look at Wells. So these companies didn't actually report great earnings. Here's the report. Here's the movement. So it was the day of, right? So this is the stock before. The company reported before the market opened. This was the move, right? So it wasn't good. So we're looking at a pretty substantial drop. But now it's so interesting. I always use 2 days on the banks. Here's 1 bad day. Here's 2 bad days. And look what's happened since. There seems to be this, and I think if I do JP Morgan, we'll see the same thing. So here's day 1, because it was on the open. Here's day 2. Actually had another down day, and then it came back up. So I like this trade. Let's take a look at what exactly we're selling. Let's go to something more recent. Yeah, I mean, the risk to reward is pretty tight. So here's my adjustment. I'm selling a $5 put spread at $1. So that's a pretty bad. Oh, let me take out the limit gain. Sorry about that. Okay, so I'm selling the most recent trade was a $5 put spread at $1. Not a great max gain to max loss, right? Max gain is $1, max loss is $4. But I think if we make it so okay, so I'm putting in a 100% stop loss. When we're using this part of the software, it's actually just specific for a credit spread. It's just specific to the credit. So what I'm saying is I'm selling $1 put spread. If that put spread goes to $2, so I've lost $1, I'm out. I don't want to lose any more than that. So I put it in. We get a few more losses, but what happened to the returns? Let me go back, sorry. 42%. Maybe I wouldn't put in the loss. Okay, interesting. See if I use a different option if it matters. Not really. Okay. All right, so if you want to be a little risk protected, selling a $5 put spread at $1, so you have a $4 max loss, you could put a stop in and say I only want to lose a maximum of $1. You would get stopped out more often. It is, less risk. But if you let it ride, it has won 7 of the last 8, and that's in the last year, 3 of the last 4. And it was a coin flip in the last 6 months. I still like the trade, I gotta tell you. I like the way the stocks are behaving right now. I like that they actually kind of didn't have the greatest earnings of all time, but they are bouncing back. So if you're looking if you're a premium collector and you want to make it's not really a bullish bet. It's like it's a non-bearish bet, right? This is a bet that the stock won't go down very much, basically, surrounding that earnings release. I like this. Looks good to me. So that's one trade I would consider. It's today. Let's take a look at what that really means in the real world. Just to make sure I understand, you're doing a put credit spread for IBM JPM. That's right. So to be clear, I was testing credit put spreads in IBM, and JP Morgan, and now also Wells Fargo. Let's see what that trade would be today. We would use, so today's the 19th, a month from the 19th would be the 18th. So the trade would be, here my deltas are on the right. I know this isn't quite what Thinkorswim looks like. I don't use Thinkorswim, I'm sorry. So we would be selling, we would be selling the same trade, the 90.85 put spread. It looks like as of today, we'd be collecting around 75 cents. So, it's something to consider because the risk to reward isn't great. I love the win rate. Let's see who else has earnings coming up. AMD, you guys have any stocks you want me to look at in particular? Let me broaden out this chat thing, because I see you guys trade SRP. Oh, SRPT, that's great. Oh, can you not see my mouse moving back and forth? Goldman Sachs. Okay, we'll do Goldman Sachs. Oh, the days to expiration is not necessarily 7 for weekly, but just 30 for monthly. Okay, so that's a good question. So in this trade, this is a 30-day trade. I'll just put it back to 2. So this is a 30-day trade, right? And you notice I'm using a 38-day option. I'm actually just trying to get the thing that's not less than 30 days. So I actually would trade the monthly option, but the backtester is doing its best to find the option that's closest to what you want. So if I put a 30 in here, oh, what did I do? Let's try that. Oh, hold on. Sorry, I'll be right back. Here we go. Sorry, guys. Hold on one second. Trying to pull up, for what I'm doing. I'm trying to pull up that JP Morgan trade again in a fresh window. Why is Amazon doing this to us? Hold on, resetting the box. We're telling Jason to. Sorry, here, John, I'll give you, or you can take control back if you want while I try to get this working again. I'll look at Goldman Sachs while I'm at it. And does anyone trade AMD? Are you guys into AMD earnings at all? Or I don't want to do something that doesn't really interest the group. Sorry, trying to catch up on chat, sorry. Hold on. Okay. All right, here we go. Let me just finish my little explanation on what I was doing with JP Morgan. So I was doing that trade for a month. Okay. So all I was saying in that trade is that since this is a 30-day trade, I want to make sure the option is more than 30 days so it doesn't reopen. So I just start playing with the days to expiration. So I'll try like 31, 32. And I know when it's right because we're looking at only earning sessions. And so in the last 2 years, there have obviously been 8 earning sessions. So I know that the total number of trades should be 8. So when I drop this down to like 27-day options, you're going to see we're going to have a lot more than, we have a lot more than 8 trades, right? We have 15 trades, which isn't really what we're trying to do. Sorry, I'm trying to get to chat too so I can make sure I talk to everyone. Let's try Goldman Sachs, see what's going on. So here's what's happening with Goldie. Earnings were yesterday before the market opened. Looks like the stock, okay. Oh man, I didn't realize Goldie had such a bad day yesterday. Okay, so here's what Goldman Sachs has looked like over the last 2 years. The E's are the earnings, right? And so let's see what this company does. Looks pretty calm, actually. I feel like this could be a good trade setup. Let's see. All right, so let's start with a short-term trade. Let's just try a 1-day trade and see if there's anything cool going on. Actually, this would be 2 days after earnings. Let's see. All right, so we don't want to be selling puts right after earnings, which kind of makes sense, not for a day at least. Oh, let's use the weekly option. All right, so we don't like that trade. I would be interested to see if owning volatility for the month following earnings has been a winner. Just curious if the market is pricing that wrong. So what I'm gonna test right now is, let's try that. For the month after earnings, I'm gonna see if owning volatility has been a winner. Look at that, look at that, look at that. Okay, so what I'm looking at now is for the month following earnings. So here's the setup. 2 days after, we can make it 32 days if you like. I'm just curious, there is a vol crush, okay, no problem. The question is, does the vol crush go too far? Does the volatility become too cheap? And should we be buying it after the vol crush? And if we're looking at an at the money iron condor, which is actually an iron butterfly, it's fine. It's won 6 of the last 7 times, and it's been a really nice return. Also, what I love about this trade, of course, is that we have super well-defined risk. So let's go to the most recent trade. Oops. Looks like we were, oh, that's the closing trade. Opening. Buying the 217.5 straddle and selling 205, 230 strangle. What an interesting trade. So yeah, if you want to hedge, if you're generally short vol, which I tend to be, and you're looking for a hedge, I'm talking about essentially a portfolio hedge. It looks like owning the iron condor, the at the money, the iron butterfly, for the month following earnings of Goldman Sachs has worked really well. You can see, I can put that into actual English here. So what that actually means. So today is July 19th. And so we would be looking at the Augie 18 options. The at the monies are, let's go to the weeklies. There's more liquidity here. Okay. We would look at the two, so this would be buying this straddle. So that's what we're paying here, about 10 bucks. And we would be selling the 212s at about $1.75. And we would be selling the 235s at about $1.50. So that would be that condor has worked out pretty well for the last few years. Let's see if this is, I actually don't really look at that. So over the last 3 years, so the only time it's lost in the last 3 years, I have a funny feeling the last time it lost was last earnings. Let's see. Yeah, of course. Let's see. Yeah, so buyer beware, I suppose, but it's worked remarkably well. And the one time it's lost recently was last earnings. Having said that, and we are in August, I don't know. I'm pretty short vol, so I like this trade. I don't know. And we can put a stop in and say if it's not working, should we just close it? Let's see what happens. Yeah, we should definitely do that. All right. So I put in a 50% stop and it hasn't changed my returns at all. So why risk that much at all? So okay. So one possibility for Goldie, if you're so compelled to trade this name following earnings, is to buy this at the money straddle and the Augie 25 options. Sell the 20 delta puts, which would be the 212s. Sell the 20 delta calls, which would be the 235s. Put a 50% stop in there. And you have a high probability trade. Doesn't mean it's going to win, but it's a high probability trade. That's good. Hold on, I just lost my chat. I lost my chat. I can't see your questions right now.
If you lost it, if you go up to the toolbar, you'll see the little, I think on the right hand side, you'll see a drop down that says chat, and then that should re-highlight it for you.
Okay. Up here. Yeah, I have that. It's funny. I have the chat window open. I see all the attendees and us, and I can't see any messages.
And it may be attached to your. It happens to me too. I was like, oh, where'd it go?
Let's see. I mean, something tells me it's me and not the software. It's my best guess. Let me give you the screen back, and then just let's see if I go back and forth if that works. I don't know. It's gonna sound weird. Let me try one more time. For a technologist, they sure are not very good at Zoom. I'll tell you that much.
Zoom has some quirks.
Generally I like it. I really liked it for the webinar too. Man, I'm really sorry, guys. I feel like you're asking questions and I'm just being totally unresponsive, and I don't mean to be. Man. All right, John, I'm going to give it back to you.
Yeah, let me do this. Let me grab it, and then if you want to, a lot of times when you grab it back, you'll see the chat. Like
yeah,
it's a weird thing. But yeah, let me grab it from you, and then.
Okay.
And then, yeah, one thing I like too about your discussion, I mean, I love everything about the discussion, but it's great too, because I kind of tend to focus on tech stocks. And so I like it. I love it when people, someone else will come, that's like, oh, well, I really focus on finance stocks or things like that too. So I learn a lot just kind of watching and, looking at
Yeah.
different things like that too.
I'm super tech heavy too. Really, I just in the liquid bank names, I just find them pretty compelling. So, just broadly speaking, like when I'm selling, I'm selling credit spreads and I'm selling vol. I like to sell in companies where there's not going to be. One of my cats is going insane. This is hilarious. I like to sell it in names where I'm not. I just you're not going to wake up one morning and J.P. Morgan is down 20%. It's just, I mean, the market could be down 20%, but that's just not going to happen. And in tech names, you can get that, so it's a little bit trickier. So that's why I tend to look sometimes at financials for these. It's so funny now that you took the screen. I have chat and everything. Okay.
Yeah. One thing I notice that happens is that when I'll be talking, and then sometimes the chat actually will attach itself to the screen. Like it's really weird. And then but if you want to try it again, go for it.
All right, I can see questions. So I'll actually answer a quick question. In custom earnings, will 0.5 days after earnings use noon pricing? And it's no. So it will just round to a day. So one thing that's, this is just broadly speaking, the backtester, we use, for all intents and purposes, end of day pricing, let's say 3 minutes before end of day pricing. And so that's for all of it. That's for stops, that's for limits, that's for earnings trades, just know that. So you don't want to get so fine in the backtester that you're using like decimals, because it's not actually, I don't think it's actually giving you what you think it is. So it's a really good question. It's something that bears repeating, and Google's on the rise for all you day traders. Let me fire up the backtester, which is now hiding. This is the one pain of having too many monitors. Let's try this again. Okay. All right. I think I was looking at Goldie. Let me pull it up. Put spread, sell it, custom earnings. I know you guys think I'm talking to myself. I'm actually doing something. Okay.
I do that all the time.
Okay, I'm going to throw this here. I'm going to grab Zoom. I'm going to pray that chat doesn't go away. And I am gonna share screen. Is that okay, John, if I take the screen?
Yeah, go for it. And I'm gonna have to pop out of here in about 5 or 10 minutes. But there's
okay.
no, if I think we're officially going to 10:30, but you can keep talking.
Okay.
If there's
all right.
Stuff like that. So there's no hard stop.
Okay. I'll stick around and answer some questions. Let me just get all right. Are we all good? Everyone sees the screen and normal? Okay. All right. Ophir, do you trade biotech or avoid it? No, I trade everything. Yeah, I'm not allergic to any trade, just certain types of trades. Thank you for telling me to see the screen. Awesome. So there's a question here. So when earnings are released after market closes, is the next calendar day one after earnings? The one calendar day is 1 day after earnings. Right. So, okay, the most important thing, this is the most important thing if you're going to use this, and I use it many times a day. If you're going to really start cutting a fine line, so a lot of the research we'll send out will be like, it's going to go out again, but actually I'll just bring up the trade here. Let's just do Starbucks. Let's get long a straddle, but quite different than what we've been looking at. These are, so just so you know, Starbucks reports on, just pulled up a bank. Starbucks reports on the 27th after the market closes. That's 8 days from now, okay? But they report after the market closes. And I want to do it at the money straddle, sorry. A little trick for you guys if you want to go faster, you can put a comma after the ticker. It'll only do one back test, and the deltas it's going to pick up are the ones that you have in the middle. That's what it is. And let me figure out, without blowing that up, let me figure out what that trade was we sent. Go to Discover, go to Starbucks. All right, 6 days before earnings. All right, 6 days before earnings. Okay. And I guess I was using a 30-day, which option was I using? Oh, was I using a weekly option? I don't know what I was using. Okay, so this is what I'm looking at. This article is going to go out in 45 minutes to those who haven't read it yet. If you're a Trade Machine member, the idea here is pretty simple. So the week before earnings, we want to buy an at the money straddle. What I was going to say is that I can use 0 days before earnings if I'm not trying to capture earnings, only if the company reports after the market closes, right? Because 0 days before earnings is a fancy way of saying the day of earnings. But if you close the day of earnings and the company reports after the bell, you're not playing earnings. But if you're trading another company, like a bank, that report the day, that report before market open, you have to put a 1 here. So be really careful with your back tests, especially if you're doing multiple tickers at once. If they don't agree, you can't do them at the same time to get the same results. Okay, does that kind of make sense? So anyway, this is a cool trade. Over the last 3 years, buying an at-the-money straddle, just buying a straddle with the monthly option for 1 week before earnings, but closing before earnings, right? We're not taking the earnings bet. Has won 10 of the last 12 times, but what I love is that in the last year, it's won all 4 times. The wins, this is not an NVIDIA trade or a Tesla trade where you can see just crazy wins. But the win rate is really high, and for a portfolio like mine that is just wildly tech heavy, I like these trades. So this is a really good example. And while I have this set up, I actually like this trade for a lot of companies, and I like testing them all at the same time. So we have Starbucks in here, but I'll just test it with like Google, Apple, NVIDIA. I don't know. AMD's coming up, right? Why don't you guys hear, someone message me for one other company so I don't just do what interests me. I don't know. SRPT. Okay, great. Yeah, let's do biotech. Really good idea. Also be better if I spelled Google right. I'm going to take Starbucks out because that worked. So let's do a biotech. So, all right. So we're testing. Whoops. What happened there? Oh, because of SRPT. How annoying. Because there's a day before earnings trigger. Oh, okay. So these don't all report at the same time. Hold on. Now I just broke my cardinal rule. All right, let's go one at a time. Okay. So here's AMD. Okay, so AMD is not that compelling at all. I think I looked at that already, actually. Yeah. So I don't know. I'm not so compelled to buy the vol. Although it's interesting if you look at getting bullish in AMD, because sometimes it works. Let's see that biotech Sarepta. All right, because there's day before earnings trigger, and because the first day of earnings is a day. Okay, you can see this. Yeah, no problem. Okay, so for Sarepta, so this biotech was pre-FDA. Now it's not. Oh, they report today? After the close. Let's see. Yeah, I don't know. I mean, here, let's just look. Please don't do this unless you have just a lot of cushion in your account, but we can look at an only trade earnings thing on Sarepta and just see. I hesitate to say this. I don't think this is a good idea, but I'm just going to let you know that selling the straddle the day of earnings and buying it back, that is making it a huge volatility bet on a biotech on earnings, has worked out very well. I hate that trade. Just to tell you the truth, I don't like selling naked vol and biotechs on earnings. That's definitely not my style. But different strokes. Any other stocks you want me to look at before I show some of the ones I like? Let's see NVIDIA. Definitely don't want to short anything in NVIDIA. When is NVIDIA reporting? Hold on. Okay, we got a while for NVIDIA, right? If I do Starbucks 6 days before. Okay, if I do Starbucks 6 days before earnings with a 30-day expiration, is it looking at a 7-day options? Okay, so good question. If you're looking at 6 days before earnings, you looking at 30-day option, 30 days to expiration, it is using the 30-day option. So the reason I do that is since we're buying a straddle before earnings in anticipation of a vol rise, I don't want to deal with the decay, and the weekly option decays a lot. So that's why I use a 30 days. You are using a 30-day option. Let's look at NVIDIA. I've always, not earnings. do a custom earnings. I'm just curious. Yeah, it doesn't matter, 7 days. I'm curious if getting bullish NVIDIA. Someone, a Trade Machine member showed us this. Oh, right, sorry. Oh, so I'm gonna show you this error, just so you know what's going on. So strategy is a problem. The option selected resulted in multiple attempts to open an option of the same trade. So that's happening because I'm now looking at a spread and I'm looking to buy the 50 delta and sell the 50 delta, which of course doesn't make sense. So the backtest is gonna not, rather than give you a nonsense result, it's gonna tell you, hey, change the deltas. So this is awesome. Oh, actually, let's just look at the full boat here. So one of our community members noticed that just buying a call a week before earnings for NVIDIA, oops, I'm looking at the week before earnings. And NVIDIA reports after the market closes, so this 0 is valid. Buying a call was okay. I'll just go to calls. I mean, try not to get blinded by the returns. Let's just look at win rates right here. Like, 5 out of 8, it's not like the greatest trade of all time. But when we turned it into a spread and we sold some out of the money calls, look at this. So buying an out of the money call spread, or for that matter, buying an at the money call spread, this is owning the vol, right? And NVIDIA in the last 2 years, just ahead of earnings, has been a great trade. Let's see how it's done. I mean, my goodness. Yeah, I mean, there's a very good chance I'm going to put this trade on, right? So in the last 3 years, 11 of the last 12 times it's worked. We've bought the 50 delta call and sold the 20 delta call. And just to put numbers to that, like, what does that mean? The last one was, so this is, you can see May 2nd, we opened it. We bought a call for the 104 calls. We bought a call for $5. We sold the 116 call. So bought the 104 call, sold the 116 call. So that's a $12 spread, right? We paid 5, sold 138, paid 330. So that's a great max profit to max loss. And then that trade, actually last time was a small winner, but this is the type of trade we're looking at in NVIDIA. It's buying like a, a $13 or $15 call spread for a couple bucks, not playing earnings, kind of hoping or betting on the fact that this bull market kind of continues its personality. I'll show you what I mean by personality right here. So this is an NVIDIA stock chart over the last 2 years. The E's are earnings, the D's are dividends, so you don't have to pay attention to them. I'm going to look at, I'm actually going to go back in time, look at the 2 years ago. So earnings is after the market closes, right? So let me zoom in even further. What is this? This is in October. I'm going to show you what's going on. This is not an earnings move, right? So NVIDIA reports after the market closes. So what happened 6 days before? Okay, so this one was not great. Let's keep going. All right, so check this out. You see this rise? I don't know if you guys can see you can't see my charts. Oh. You guys can't see my charts right now? Can you not see, a black background with a red line? Oh, man. All right. Sorry about that. Can you now see my screen, though, when I move that out of the way? Oh, man. Okay, that's so interesting. Let me reshare. Hold on. I'll be back. Okay, can you see the screen now? Oh, my chat went away. Oh my God. Hold on. I'm gonna unshare again. Just 1 second. I'm gonna grab the chat. Hold on 1 sec, guys. I'm still here, don't worry. Okay, and now I will share my screen. Okay, now, can you guys see my screen? Yeah. You see the trade machine, right? That's what I'm saying. You see this. You see trade results for NVIDIA, right? Okay, that's fine. So there's this personality to, I'm gonna just look at the stock, so I'm gonna unselect all the option strategies. There's this it's impossible to see with NVIDIA because the stock goes up 1,000,000%. Let's just do Google. There's this personality to this bull market, which is that, no, this is Zoom, not CML. Yeah, Zoom, I'm not very good at Zoom, so I keep blanking out. Sorry, this has nothing to do with the software. So let me take these all out. All right, okay. So into earnings, there's this crazy, ooh, I bet you this will work. Tell me if this, I'm gonna pull up something that should work for everyone. Okay, can you guys tell me if you see my screen? I have just like a text on my screen, an article. Okay, cool, awesome. So this is what it is. So this is Google. The E icons are earnings, and I've drawn those little yellow arrows in there. That's the move before earnings. It just goes up, right? Now the boxes I have afterwards are actually the move after earnings, and it goes down about as often as it goes up, right? It's not that Google just always goes up after earnings, and so everyone's crowding the trade. It's not at all. It's actually kind of a coin flip. There's just a personality to this bull market, and the personality is that the mega tech, so like Google, Nvidia, Facebook, in some respects, Facebook and Apple, they have slightly different risk profiles, but companies like that, there's just a huge amount of anticipation into earnings. Actually works even for Twitter, which is, they report awful earnings. But there's just so much optimism into the earnings trade that you can just play that and just step out of the way. It's like, hey, I don't want to play earnings. I don't play this 50-50 coin flip. And so that's what we were looking at in NVIDIA. I'll pull it up now. And again, I'm doing it to the day of, I'll just do a week. It doesn't really matter. Oh, I want to be long the call spread. Thanks. Okay. Yeah, so this is what we're looking at. You can either do an at the money call spread or an out of the money call spread. So the 50-20, I don't know. I think Google, I'm feeling bullish on Google. So just so you know, here's the trade I actually put on for Google. It's too late now, sorry. But this is the trade I put on for Google, and this is exactly why. I bought, let's do this here. I think I did it 14 days before earnings. Yeah. Okay, so this is what I did. I'll make the numbers a little smaller. Well, not that much smaller. So buying an at the money call. Oh, actually, I did an at the money call. I did a 40 delta, 35 delta. All right, let me see exactly what the trade was so I can replicate it perfectly. Hold on one sec. I want to make sure I show you exactly the trade setup. Google, 15-1. Okay, awesome. Okay, yeah, it's actually pretty interesting reality about these companies too. The day right before earnings, oddly, they tend to go down. Really, really bizarre bull market. Okay, so am I doing this all right? Yeah. Okay. All right, so I was looking at this trade, buying the 35 delta call 2 weeks before earnings, 15 days, and then closing it actually 1 day before earnings. Has just been a gigantic winner. I was just so compelled I couldn't help myself. So I actually did this trade. I'm not going to try and bring my trade thing on the page because it blocks everything out. But what I bought the Augie 25 Google 980 calls. So 980, the stock was trading 950 at the time. I bought the 980 calls for 19 and change. And they are now trading, the 980s are now trading at $37. So I've basically doubled my money in a week. I have a trailing stop, so this will be a winner unless Google does something terrible and pre-announces or something. But I really like this trade. So maybe this earnings session, it's not, it wasn't timely enough for this quick one because Google announces in 5 days, by the way. But that's what I look for. So let's see. Apple is actually on the 1st of August, right? I remember. And so the 1st of August gives us about, I think we have about 10 realistic days. Yeah, not crazy. I don't know. Don't like it in Apple. I loved it in NVIDIA, and I'm probably going to put this on, in particular, this call spread. Was it the 50? I think with NVIDIA, I was looking at a week, right? Yeah, so I'm doing this. There's just no way I'm not doing this. I'm going to buy a call spread in NVIDIA. Earnings are reported. Okay, so I have a projection of 810, but I'm not sure. So later, it's a bit later. Report's a bit later. But on the week before, I'm just going to try it. I'm just going to get long this call spread and just kind of see if people get silly with the optimism. Just curious what happens if I close one day earlier. All right, it's a really good lesson. So here's the one thing about this bull market. Everybody piles into the tech stocks, but the day before earnings, the stocks usually go down. I have no idea why that happens. But so that's the same thing I did with Google. I'm going to close the Google trade unless I get stopped out one day before earnings. So not the day of earnings, even though I could do it on the day of earnings because they're after the market closes, right? And the same thing for NVIDIA. So look at this call spread. Yeah, look at this call spread over the last 3 years. My goodness. I mean, look at this one. Here, let's stick with the out of the monies and just see how it looks. I mean, how can you not at least give this a whirl, right? Just at least try. You can be tight. It's a call spread. So this is what I'm going to put on. I'll send this out to our members probably this week, maybe next week, so it's a little closer to the event. But this is what I like to do. You know, I like to. This is, you know, we should be aware this is long Vega, right? This is long vol, and it's also long deltas. This is a stock direction bet, right? No doubt. But with some of these tech stocks, like people are like fanatically bullish into earnings. So you know, why not play it? We can look at some. I also really like some non-directional bets, but those are generally buying vol, so like buying straddles. Doesn't work great in NVIDIA. I think buying, when is Facebook reporting? 726. Ooh, this is realistic. Okay, good. So I don't know if this is going to work, but we could actually place this trade right now. It does work. Not so good. All right, so I'm testing buying the at the money straddle exactly 1 week before earnings, which is actually today for Facebook. And it hasn't done that well. While we're at it, let's see if people get bullish, right? Of course, you can't do a 50-50 call spread. So, oops. Oh my God. Okay, there we go. Yeah, no. So that's what I was telling you. Facebook and Apple have a slightly different risk profile. So they don't get that bullish into earnings. Is there anyone else that we really love? In 1 week, because in the 1 week test, I'm using 30 days to expiration. Yes, exactly. Yeah. So what the reason I'm doing that is I want to play a vol rise and in some cases a delta rise, but I don't want to fight against that much theta, right? I don't want to see that much decay. And if I'm using the weekly options before earnings, even though the earnings event is still in those options, there's a significant amount of decay. I'm using the 30-day options, just, you know, it's fine. There's not going to be as much decay. Yeah. Since I missed your Google trade, I tested and bought the July 28-30 delta and sold the 15 delta yesterday, up 25%. Yeah, exactly. So, you know, I would have a trailing stop on that maybe, you know, like make sure you keep those gains. And one thing I'll just, again, it's very non-obvious, but the day before earnings can actually be awkwardly bad for these stocks. So it's like huge run up, huge run up, huge run up. The day before earnings, people sell. Why did I not look at Amazon? You guys didn't remind me about Amazon. The most bullish stock in the world. Okay, I think Amazon's a great company to own vol, actually. Let's see. Not 50. The great frustration of custom deltas. Not so much, huh? Interesting. Never would have thought that. Let's see. I feel like that's going to change. When is Amazon reporting? Oh, in exactly 8 days. Okay, I'll look at Alibaba in a sec. Let's try to figure out an Amazon trade. So it's 8 days. So actually, I'm just going to do 8 days because that's actually 8 days away, right? Man, it doesn't work. Thank God for backtesting. There's so many bad trades I would have put on if I didn't look. It's so funny. I would have just thought automatically buying vol on Amazon ahead of earnings would have worked. It has not worked at all. Yeah. No, I'm going to step aside. I'm going to step aside from the Amazon trade. Let's look at Alibaba. When is Baba reporting? Baba reports. Okay, Baba's kind of around NVIDIA, so beginning of August. I think I have a trade on Alibaba, right? Let's see. I feel like I just wrote one. Here we go. Oh, yeah. Yeah, 810. 810, but it's not confirmed. I have a, what my system is telling me is August 10th, but it's not confirmed, so it's going to be around then. So if you guys want to kind of take a dive with me into a really advanced trade, this will be the last thing I'll show. But this is, I would consider this trade I'm going to show you essentially as advanced of an option trade as, you know, as there is. This is, we're stepping into the world of expert option trading. Okay, so this is what I'm going to do. I'll try to explain it. I did this on the webinar, so for anyone who's already seen it, I apologize. I didn't show it in Baba, so I'm going to show the trade. Well, first of all, I want to do it in Alibaba. So. Always good. Alibaba reports before the market opened, by the way. So that's huge, right? Alibaba reports before the market opens. Be careful. Okay, this is a trade I'm going to show you the results before just to motivate it, right? It's won 7 of the last times, 146%. This takes no delta bet, no earnings bet, and very little vol bet. And I'll show you what I did. So this is a custom strategy. I'm just going to recreate it. So this is what I want to do. All right, so try to, oh, John did Baba this morning. Did he do this? I don't want to repeat it if he did. Okay. So for those of you that are advanced traders, I'm going to go a bit slow for you. For those of you that are kind of on the fringes of like advanced to like intermediate, I'm going to try and take this slow. Okay. He did a straight long straddle. Okay. You know, it's interesting. Let's just see how that did, just out of curiosity. Doesn't look so great. All right, let me do custom. All right, so here's what I'm going to do. First, I'm going to buy the monthly at the money straddle. Okay, so buy a call, 50 delta, 30 days to expiration. I'm just going to do 5 contracts, but that's totally random, right? Great. Now to finish off the straddle, I'm going to buy, I'm going to buy the 50 delta put with 30 days to expiration. Okay, so far, all I've done is I've manually entered a straddle. Okay, but what I also want to do is sell a shorter term straddle, actually the weekly straddle. Okay, so I'm selling 50 delta put that expires in 7 days, and I'm selling the 50 delta call that's expiring in 7 days. So everything I'm showing you right now, by the way, this is from Trade Machine Pro, which is great. Everyone on this has Trade Machine Pro, but you know, there's always going to be a $49 version of this product. This is now the $99 version, which you guys have. So this, what I'm showing you, is very particular to Pro. Okay, so just I'm buying a 50-day straddle. Sorry, my goodness. I'm buying a 30-day straddle. I'm selling a 7-day straddle. Okay, so this is delta neutral. Well, there's no stock direction bet, right? It's not quite volatility neutral, but pretty close. And the way this trade wins is that this 7-day straddle, as we go into earnings, starts to decay faster than this 30-day straddle. That's the bet, that this straddle will decay faster than this straddle, and the stock doesn't go anywhere crazy. If the stock moves a huge amount, this won't work very well. It's still a well-protected strategy. You can only lose what you pay. This is a debit spread because this will cost more. The 30-day straddle will cost more than the 7-day straddle. So this is the setup. I call it, I call it like long short straddle. I can't think of a better name for it. You can call it whatever you want, of course. So I'm going to save it. Okay. And in Alibaba, I think I did something bad. What did I do wrong? Did anyone see a mistake here? No, long. Let's go to the other one. Oh, of course. So I have someone else's commission schedule up here, which is killing me, but it's fine. Okay, so I'm long, the 30-day straddle, short, the weekly straddle. The bet is there will be more time decay in this straddle than there will be in the short straddle, than there will be in the long straddle, and the Alibaba won't move that much ahead of earnings. This is a well-defined risk strategy, which is to say you can only lose as much as you're paying, the difference between the two straddles. So you don't have any naked risk here, right? This is not an uncovered strategy. It's not crazy. And I love this strategy. It's straight down the middle vol scalping. It's a reminder that if you're option trading, you are volatility trading, even if you don't think you are. You're trading volatility when you're trading options. And this is a great approach, which when it loses very little. Look at this. The average win was $229. The average loss was $10. When this trade loses, it doesn't lose very much. You can lose, right? There's no silver bullet. We don't print gold here, nor do we print platinum. But so it can lose. So let's not go crazy. In fact, just to maybe give it more realistic background, it's 3 years. Yeah, it's lost twice in the last 11. This does lose, but when it loses really small. When it wins pretty big, and it wins really often. So this is a really, really clever trade. The only part about this trade that I'll kind of warn about is since you're doing 4 legs, just make sure you have good commissions, right? So some places will consider this 4 trades. If that's the case, find another broker. Some places will consider it 2 trades, so 2 straddles. That's okay. If you have a great relationship with your broker, they might consider it 1 trade. Right? So that's up to you. So just be careful. Execution matters. So that's the last thing I'm going to show. Unless anyone else has one last question. Have any questions about Trade Machine? Remember, so is the long straddle suitable for doing on weeklies over and over? So someone asked Someone asked for the Baba trade. Is doing a long straddle suitable over and over? I would say no. So buying a weekly straddle all the time, just kind of blind, just means is buying volatility good? And that will work great when the market crashes. It'll work really great when the market crashes, but otherwise that's probably a loser. In fact, I'd probably be a vol seller, but please don't sell naked straddles. All right, guys. So, you can always contact us at support@CMLViz. We have a great team. Anything that requires my attention, they just send to me. So, I'm a heartbeat away. How frequently do you have live trading by CML? We actually don't have training. The Baba trade was 6-1. Remember, Baba's before earnings, right? Baba earnings are before the bell. So you have to put a 1 there. Be super, super careful, right? We don't actually do live training for the backtester. So actually, John's invitation was the first one, and I suppose this is the second. So maybe we'll entertain doing it more often. It seems like it was really well received. So perhaps we'll set some up. But I do send out, when I write the trade setups, first of all, I just want you to know I don't love every trade setup. I think some people might love every trade setup, and that's why I send them out. I'm not going to send a bad trade setup. But I don't do every trade. I just want to be really clear. I trade some, like I'm on the Google one. I'll do the NVIDIA one. I'm probably going to do something in the banks. But some of our articles, I'll just go ahead and record the screen. So that's kind of my training session. So if you go through the Discover tab here, I think if you just search for the word video, yeah, video. So you see every so often I just recorded it. So that's kind of my training session. All right, guys. Thanks so much for your time. Thanks for joining Trade Machine. Be patient. Be patient with Trade Machine. It takes a while to turn your trading acumen into one that is less kind of gut-based and more scientific. And by the way, I think there's a place for both, right? Like John has one of the best guts I've ever seen in my life. So I think there's room for both. The transition from being one or the other takes a little bit of time. So size your trades appropriately. Make sure you're not making wild one-sided bets. And I think that you're going to find that Trade Machine is going to do a lot of good for you. All right, guys. Have a great rest of the week. Good luck trading.